All right. So welcome guys. It's an absolute honor to have you guys here with me right about now. Sorry, my light is off. Let me do that. Okay.
The phone was on silent, sorry.
All right. So I think we're set. So welcome guys. It's lovely having you guys here. All right. I'm sure that a lot of you have waited for this particular session. And right now we're looking at the aftermath of the FOMC that was released yesterday. All right. We had the Federal Open Markets Committee meeting I think it was last night around 7, 8 p.m. Nigerian time. Okay, around 7, 8 p.m. Nigerian time. So we had that release, and as a result of that, we saw some really fantastic movements in the markets, just last night. All right. Although I had all of the setups done, and I think I shared some of my views on the FBS website on one of the on some of the commodities. Like let me show you. This was Euro USD. All right, my bias or my sentiment was bullish. This was GBP USD. My sentiment was also bullish. All right, and I think I also did AUD USD. All right, the one that gave the sweetest or the easiest entry was AUD USD. All right, because there was a very solid confirmation here from these two trend lines. Okay, then after that movement, I'm going to show you how I personally interpret the market. All right, how I personally see the market and interpret the market, especially when I am trying to get into a trade. Okay, so first things first that I do. All right, remember, beyond just a live trading session, all right, or a market review session, this is also an opportunity for you to understand, to learn how I personally see the markets. Okay, it's an avenue for you to see the markets the way I see it and interpret the market the way I interpret the market. All right. So I believe you guys can hear me. So that's what we're going to be doing right now. I'm going to be showing you how I see the market, all right, how I interpret my setups, my trade ideas, what are the factors that I consider before taking a trade. All right, so we're going to start with a breakdown of this AUD USD trade. All right, and I want you guys to notice the patterns that I am going to draw on my screen right now. Okay, please and please note the patterns I'm going to draw on my screen right now, because these patterns have the propensity to fetch you some good returns if you can learn to see them and master them successfully. Okay, so the first one I'm going to be showing you is when you see price create patterns like this. All right, say we are in a downtrend. Okay, we've seen the previous low, the previous high. Then we've seen a break of structure that has created another low. All right. We've seen a break of structure here, which is the invalidation of this low. Now, what this is supposed to imply is that we will have a new lower high. All right, since we're still in a downtrend. But in the midst of that downward trend, if you happen to see price create a new higher high, all right, which is higher than the previous high, okay, there is a huge chance, there's a very big chance that the demand zone here, all right, is going to catalyze market. So we are most likely going to see a retracement back into this area, all right, something along this line, coming back into the zone, okay, and then this becomes a safe spot for a buy. Can you guys see that? Don't forget this pattern, all right? Look at it carefully, memorize it, all right, because it could easily be the difference between what makes you a successful trader, all right, and a very terrible trader or an unprofitable trader. Are you guys with me, please? We've started the session, and I want to be sure that you guys are following me because these things that I am teaching are actually quite important. Can you guys hear me? Let me confirm that right now. Okay, I think there's a bit of a lag. Okay, good. So, having said that, when you look closely at this pattern, you will see that we can also describe this area here, all right, between this low and this high. We can also describe it as a range, all right. Now let me use this. All right, we can also describe this region as a range. So it is possible that this forms a consolidation, all right? Then we refer to this break of structure as a manipulation, all right? Because it was intentionally induced so that sellers can be taken out of the market when their stop loss gets hit here. Okay, so we'll go back to the AUD-USD chart. I'm going to pick a clean AUD-USD chart here. All right, and I'm going to just drag it here. So this is AUD-USD, and I want you to note what happened here. All right. So first of all, we saw that this was the previous low. And as you can see, this was the structure we're coming in with. We came in with, all right, lower low. Okay. Then we formed another lower low, all right, and then lower high. And that was followed again by a new lower low. All right, and you can see that that new lower low was quickly rejected to give a sharp return where you can see that price broke above the previous high. All right, very clearly broke above the previous high. So this told me, or this is the pattern that tells me that there has been a shift in the structure, all right, or what we call a change of character. So the structure is now bullish. Okay, then what did I do next? I simply came to search for the demand zone that caused that break of structure, which was this demand zone, all right, which I also confirmed using my Fibonacci retracement level. All right, and you can see this was 88.2, 76.4. Price got to the demand zone here and went straight for our take profit, which is at 23.6. Are you guys learning right now? Let me know if this is making sense, because this pattern, we're going to go over to the current market chart, all right? And then we're going to look for trades using this particular method. Okay, we're going to go over to look for trades using this particular system, all right? And usually whenever we have trades using this system, it guarantees us between 1:3 to 1:10 risk to reward, all right? So between 1:3 to 1:10 is what we expect in return from trade setups like this. Okay? So let me know if you're following along, guys, because this is pretty important. All right, and I need you guys to get every bit of what I'm teaching or sharing with you guys this afternoon. All right, this thing that I'm teaching you is something that you would have had to pay a whole lot of money to learn. All right, because this is what they call algo structure. All right, and it doesn't really matter about what time frame you use it on. It actually works on major time frames. All right, it works on virtually all time frames that I have come across. Are you still with me? So we're going to go back to the charts right now and then look for trades based on this. So when I want to look for trades using that pattern, all right, I want to be sure that I am looking for those trades around very strong areas of support or resistance. All right, but I have a very special way of locating areas of support and resistance. How do I mean? To locate my areas of support and resistance, I use my line chart. Okay, and when I use my line chart, I am looking for areas where price has done something like this. All right, I'm looking for areas where price has done something like this. All right, so for me, this zone, all right, this area would be a valid resistance. All right, using my line chart, this zone would be a valid resistance. Why is it a valid resistance? One, we can see that this point, this line, this price line it acted as a support here, and this price line acted as a resistance here. So that's my first line. This is my second line. We can see that here it acted as a resistance, but here it acted as a support. So if price returns back inside this zone, all right, I am naturally expecting to get an opportunity to sell. Are you still following me? This pattern appears, it doesn't matter what time frame, it doesn't matter what commodity. You will literally find it on almost all commodities, all right, on virtually any time frame. Okay, I just need you guys to follow me closely because I am trying my best to show you some of the secrets of smart money concepts, which is literally what I teach and I've been teaching for the past about 6-7 years. All right, I've been teaching this for over 7 years, and I have never had a student who came back and said, oh, I tried this, it didn't work. Okay, so please pay close attention. So now that I have my support or my resistance marked out, let's see what happened here. Before price formed all of this, all right, before price came this way, how did I know that there was going to be a reaction? Follow me. We can see that this line, all right, we see that that particular price line has been quite active. What do I mean by active? We can see that it acted as resistance here, resistance here, resistance here. Okay, so that's our first line. Then we have the second line, which you can see that here it acted as resistance, here it acted as support, support, support. All right, so I have my zone. So this is what I refer to as my pivot zone. All right, so that becomes my pivot zone. So we'll change over to candlesticks now, and then you'll see what happened. So when I change over to candlesticks, I simply go inside that area of the pivot zone and search for the demand or supply that is there. And this was the demand zone that occurred inside of that our pivot zone. And you can see that it was exactly from that demand level, all right, that price made this move. And this move, as you're looking at it right now, all right, if we were to estimate it and reach to reward terms, this is 13 pips risk for a return of about 125 pips, which means that this is about 1:8 risk to reward. My SL would be just below the zone, all right, the demand and supply zone that I'm entering from, all right, that would be what I use for my stop loss or take profit. Please, if you're learning from this session, I would appreciate if you can just tap on the like button. Just keep tapping on the love button, all right? Because this is a secret that not many people have. All right, we're going to look back at the market again, and then I'm going to show you this particular area that price started dropping from. You will notice that we also have a zone there. All right, you notice that we also have a pivot zone. Here it acted as resistance, 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 then support. All right, then we have it here where it acted as, all right, let's put it here, okay, for convenience sake. And if I change over to candlesticks, all right, and I locate the supply zone within that area, all right, this is the 1 hour time frame, you can see, okay, that the supply zone within that area is this. All right, that's our supply zone. So from there, you can see why price is currently dropping. Okay, so now I want to know, should I be looking for an opportunity to buy AUD USD right now? This commodity is AUD USD. All right, this is AUD USD. Let me write that on the screen. So this is AUD USD. So where is the target? This downward movement, all right, where is it likely going to? Okay, and then I have a couple of options. Let me check the 4 hours time frame. All right, I can qualify this as our targets. Let's go to the 1 hour time frame, switch over to candlesticks. On the 1 hour time frame, we do not have we cannot see any demand zone inside this area yet. All right, so we'll check on the 15 minutes, we can check on the 5 minutes, and what we're simply looking for is a demand zone around that area. So on the 5 minutes, I can see that this is my demand zone. All right, that's a demand zone on the 5 minutes. This is another demand zone on the 5 minutes. Okay. And remember the pattern I showed you, we have an accumulation here. All right, we have an accumulation here, the manipulation, the breakout, which tells us that when price gets back here, we're expecting a bullish entry. Do we get it, please? Of course, this strategy works on virtually all pairs, all right? It works on any pair because this is a strategy that, like I said, I have been teaching this for over 7 years, for about 7 years, all right, over 6 years, okay? And I have not had a student come to complain to me, all right, and say, oh, I tried this, it didn't work. So look closely again, you can see that currently AUD USD is coming down, all right, which means that I have 3 options. My first option on the 5 minutes is to use this pattern, all right, to enter the trade, which means that this will be my entry on the 5 minutes. All right, so let's label it. This is my possible entry 1. All right, this is my probable entry 2. And this is my probable entry 3. Do you see that, guys? So if it doesn't react from this zone, which as you can see, there is the presence of the moving average, the 200 moving average, as a confluence. So if it doesn't react from here or here, it definitely is coming all the way here to give us the reaction. All right. So how do I know which of these three entries is the best for me? The answer is simple. I can come back to the 1 hour time frame. Okay. I come back to the 1 hour time frame and then plot my Fibonacci. So when I plot my Fibonacci, I am looking at 3 zones, all right, for my entry. Is either I get my entry around the 61.8 or the 76.4, or finally the 88.2% of that Fibonacci. Sunday, TG, okay, amen, thank you. Do we get that? So that's our expectation from AUD USD. So right now we're going to switch over and go to GBP USD. All right, gold is going to be our last consideration. All right, so let's delete this 4 hours time frame, line chart. Let me go back here. Line chart. So we can see the point or the points where we've seen price act as, we've seen a price level that acted as both support and resistance. All right, this is 1. This is 2. So let's change over to candlesticks and check. Do we have any demand zone inside that area? On the 1 hour time frame, we see that that's a no. 5 minutes time frame, yes. We have a demand zone, but it's not a very clear one. Let me see what's going on the 1 minute time frame. Okay, good. On the 1 minute time frame, this was our demand zone. And you can see that that was where price touched before it began to move. Okay. Our extra confirmation, like I told you, we use the Fibonacci. And you can see that this zone aligns with our 61.8. All right, aligns with the 61.8. So we can expect that GBP USD is going to be bullish from here. All right. So GBP USD is expected to be bullish from that point. Stop loss can be somewhere around 1.27181. 1.27181 with take profit at 1.27650. All right, remember, like I said, sometimes calling the figures like this, all right, sometimes calling figures like this makes things difficult because, like I told you, we have the governing body that regulates the license for Forex brokers mandates that a Forex broker should not give trade signals. All right, should not give trade signals. So that's why I try as much as possible to avoid giving direct trading signals. All right, and I instead focus on giving you trade ideas. Okay, so if you followed my analysis up to this point, you already know that this is the demand zone we're entering from, and this is our target take profit region. All right, which means that with a risk of about 10 pips, all right, we're expecting take profit of 35 pips, which is 1:3. Do you get that now, please? Let me show you another thing that makes this particular demand zone interesting. Is the fact that we had a previous low that was taken out, all right, that was manipulated out of the market. The previous highs were broken, all right. After breaking the 2 previous highs, then we can see what price is doing right now. So that's a risk of $4 with a take profit of about, yep, $7. Right? I might even move my take profit all the way up here. So we are risking $4 for $12 profit. All right, $4 for $12 profit. And if you're currently in this trade, all right, you should already be in profit. Remember, like I said, this is how I analyze my markets. Okay, and you can see this is a live trade. This is the current market scenario, all right, and we're already in profit. Okay, we're already in profit. That's our take profit. This is our stop loss, all right, and we're just seeing how the price action unfolds. Okay, that's all we're doing here now. We're just trying to see how the price action unfolds. All right, guys, with me, please. Now, my strategy does not require using candlesticks for confirmations. All right, I do not use candlesticks for confirmations. My confirmations are based just completely off of those patterns that I showed you. Although there are a few more things that I consider before taking my trades, all right, or that I look at before taking my trades. But this is not an actual mentorship session. This is just a live trading session, all right. But I believe that it was important for me to explain, all right, the reason why I was taking I am taking the trades that I am taking, all right. So that's why I did this, all right, to show you or to explain to you the reason why I took a buy, all right, from the point where I took that buy. Do we get it, guys? Please let me know if this makes sense. Let me know if this makes sense, because we're going to look at two more commodities before we wrap up this session. All right, we'll look at two more commodities or maybe one, then I take questions. Okay, so if you have questions, you can start to prepare your questions that you intend to ask me. All right, if you have questions, please pen them down. Okay, once we've looked at two other commodities, we're going to go straight into answering those questions. Yeah, so the next commodity we're going to look at is Euro USD. And as usual, let's go back to a clean chart. All right, we're back on a clean chart. We go to our line graph. And we can see that there's a zone here. There seems to be another zone here. So back to candlesticks. All right, you can see that price got into this our zone. All right, the first one. Let's go to the 5 minutes and then you can see. Yeah. Let me see. The demand zone that price reacted from at this point is what I want to show you. Beautiful. So we have this demand zone on the 1 minute time frame inside our 1 hour pivot zone. And can you see that it was exactly from that point, okay, that Euro USD at this point. All right, this upward push came directly from this demand zone. Are you with me, guys? All right, let me zoom in probably so that you guys can see it better. Is it clearer now? All right, let's see. No, I don't think there's any news release right now. The next news release is by 2:45, which is for USD, flash PMI. All right, so I think for the next couple of minutes, the market is free of any news. All right, are we there? So it's as simple as understanding what are the criteria that I look for. All right, if I want to take a trade, how do I find my pivot zones? All right, once I find my pivot zones, what do I do next with that pivot zone? All right, and don't forget, this is a pattern that you want to hold on to. That's a pattern that you really, really want to hold on to very much. Okay. So I'm going to take a couple of questions, all right, for those who have questions and they would like to ask their questions. All right, I'm going to be taking your questions right about now. So if you have a question, please type it in the chat box. What do we call the pattern? It's actually called algo structure. All right, it's called algo structure. Some people will call it power of three. All right, some people will call it power of three, which is accumulation, manipulation, distribution. All right, that's what they call power of three. Do you guys get it? So if you have a question, please type it. Do I follow trends in my strategy? Yes and no. The reason why is because this strategy or this particular system does not only work with trend, all right, it can also be very instrumental in helping you locate the end of a trend. All right, it can be very, very instrumental in helping you locate the end of a trend. Let's see gold. For me, gold is still quite bullish, so I don't think we have any ripe opportunities to enter a trade yet on gold because it is still very, very bullish. All right. And I usually don't like to catch a falling knife because it's one of the ways to easily blow your account. All right. When you're trying to hop on a trend that is already in motion, that is already very volatile and is already moving very fast. Is the trend really your friend? Well, I would say that that depends on your pattern of trading, your style of trading. All right, what kind of trader are you? For example, if you're a scalper, you may not necessarily need to do top-down analysis. Okay, but if you are someone who does day trading or swing trading, you will definitely need to be able to follow the trend or perfect your system for catching reversals in the trend. Okay, so Caleb is asking, is the trend really your friend, as people say? My answer to that is what I've just said. All right, the trend is your friend if you are currently trading along the line of what the trend is intending to do. All right, and then who else is there? How do we use top-down analysis? That's coming from Jerry Onyeka. Top-down analysis is not something that I can explain during the scope of this session. All right. Top-down analysis is simply a system where you are taking trades on the lower time frame based on what you have observed on the higher time frame. All right, let me give you a practical example. It's like you deciding not to have pizza for dinner, all right, because you can see or probably you can observe that in the next couple of hours, all right, there's going to be traffic. Okay, so even if you had ordered the pizza at that point in time, getting the delivery when you need it is going to be difficult because of the traffic. All right, so when you see or when you observe what's going to happen on the higher time frame, and then you look for opportunities to join that on the lower time frame, that is what we refer to as top-down analysis. All right, Caleb is a swing trader, which means that you are definitely going to need top-down analysis from time to time. Umar Ishtar, what is my opinion on gold? Gold is bullish. However, I don't think there is a ripe setup for gold at the moment. All right, I don't think that the setup for gold is ripe at the moment. Lucky is asking, why do people make profits in demo accounts and lose money on real accounts? The answer is simple. People lose money on demo accounts because, to a large extent, all right, they have more emotional attachment to their live accounts than they do with their demo account. So the problem is not really about whether it's a demo account or a live account. The problem is with the is as regards the fear of losses. All right, when you are terribly anxious, okay, or probably you are so afraid of losing, you're definitely going to have issues. What do I use for confirmation? I use the pattern that I've shown you guys already. All right, that pattern is what I use for my confirmation. All right, and I want to say a big thank you to XAU USD Pro Master. All right, because your spam, you've been spamming the live stream. All right, thinking that you're actually hurting me or getting back at me. I'm sorry to say that you're not. Rather than doing that, you're simply increasing the engagement on this live stream. All right, which means that YouTube is going to start to recommend this kind of live streams to many more people in the future. All right, as a result of the engagement. So please keep it coming, XAU USD Go Pro Master. All right, keep it coming. I'm really loving the engagement that you're giving, all right, because it's working in my favor and in the favor of this live stream. According to my setup, Euro USD is expected to be bullish, all right. However, I have not found a proper setup yet. All right, I've not found a proper entry yet. And the reason why I said that I expect it to be bullish is because you can see that on the 4 hours time frame, we have broken above the previous high. All right, you can see that that's our previous high and price has broken above that high. Okay, so what we have now is that we have formed a higher high. So the next thing would be to get a lower low or a higher low rather. All right, so we have higher high, higher low, then we can go ahead and have another higher high, provided the market does not present a shift in the market structure. Do we get it, please? All right, someone wants me to go back to the pattern. Let me show you. Yeah, this is the pattern, all right? Accumulation, the manipulation, and then the distribution. And I remember somebody was asking, how do you identify the manipulation in the market? The truth is, it is very difficult to identify the manipulation in the market. Okay? It's actually very difficult to identify the manipulation. However, instead of predicting the manipulation, I would advise that you react to the manipulation. Okay? So you wait for the manipulation to take place, and then it gives you the opportunity to be able to secure a better trade entry. Do you get it now? Jerry is asking again, is SMC a good strategy? SMC is simply smart money concept. All right, that's simply what SMC is, a smart money concept. All right, and I believe that there are so many good trading strategies. All right, a whole lot of them. A lot of them. Okay, and part of the reason is because different people have different ways of interpreting the market, different approaches to the market. All right, and as a result of that, the fact that somebody's system is different from mine does not mean that mine is better. All right, it could be that that strategy the person is using is what is best for them and best for their temperament. Do we get it now? No, Caleb, that's not the reason. All right, people don't blow their live accounts because of the broker. Most times it is because of emotions. All right, most times it is because of emotions and the fact that we are so afraid to lose. And that's why I usually advise that your risk must be within your threshold of acceptability. All right, don't risk more than what you're willing to lose, because if you do that, you will be trying to quickly close the trade and your emotions will start affecting what you're doing. All right, so let me go to the next question. Somebody is asking me to explain the Fibonacci. It's actually really difficult for me to explain the Fibonacci. All right, really difficult. All right, but Louis Teddy, we already talked about what the entries were going to look like. Probably you weren't around when we did that. All right, we already looked at a couple of opportunities that we're planning to trade. All right, I already told us about this demand zone where we're expecting to buy from. All right, this demand zone where we're expecting to buy from. And I mentioned that this is my target. All right, our initial target, we buy from this demand zone, we take profit here. All right, and that's a 1:3 risk to reward trade. Okay, and I also mentioned that if price takes out liquidity from this point, all right, or maybe perhaps we do not get an entry here, which I very much doubt, the next thing we need to do would be to wait for price to approach the 88.2%, all right, so we can work with this as the demand zone. Do you get it now? So if this demand zone does not hold and take us to our take profit here, we're simply going to use the demand zone that is after the 88.2%, all right, and we would just simply ride it this way. Do we get it now? Now, also note that I am not teaching you a 100% accurate strategy. Are you with me? This strategy that I'm showing you is not 100% accurate. But over the last 7 years of me trading with this system, it has given me nothing less than 72% accuracy. All right, between 68 to 72% accuracy in the last 7 years. And if that's the case, I believe that this is good enough for anybody. All right, I believe that is good enough for anybody. So I'm going to go back to the pattern again. All right, so on our AUSD USD chart, this pattern, all right, is also referred to as algo structure. All right, algo structure. Do you get it? Are we together? Keep the questions coming. I want to see your questions, guys. Let me see your questions, please. we can't see the prices at the zones. Yes, wisdom, I said I don't want to be showing the prices because according to the licensed regulatory body for brokers, all right, we are mandated to not show our, to not give entries. Do you get it now? We are mandated to not give entries. So if we do that, it appears as though we are giving trading signals. Do you understand now? All right, somebody was asking where is the entry point for algo structure? Where is the entry point for algo structure? So the entry point for algo structure is this demand zone here. All right, and I also mentioned that you can use your Fibonacci as a form of extra confirmation, which I mentioned that our target is between 61.8 to 88.2. All right, any demand zone that falls between 61.8 and 88.2 is our expected area of entry. What time frame do you look for the pattern? To be honest, the pattern can appear on any time frame. 1 hour, 5 minutes, 1 minute, 4 hours. It can appear on any of these time frames. Spectre, I already explained that Fibonacci is not something that I can just teach in this kind of a session. All right, so what I'm going to do for you, Spectre, as a favor, all right, what I'm going to do for you as a favor is let's talk on LinkedIn, all right? Text me on LinkedIn. I'm going to send you some materials that I have prepared on Fibonacci, all right? And it is only you, all right? It's only you that I'm talking about, all right? So in case somebody else texts me, I may not be, because I'm quite busy, so I might not be able to respond to them. Do you get it now? So Elkanah, how are we going to confirm the entry since I don't use candlesticks? That is what I'm saying. The pattern is the confirmation. All right. From the higher time frame, we have already located our pivot zone. All right. From the higher time frame, we already have our pivot zone. So what we do is that from that pivot zone, we simply go to the lower time frame and locate that pattern. All right. It's as simple as that. Do we get it, please? So let's see any other questions. Any other questions? Do I use 76.4 or 78.6? I use 76.4 personally. All right. I use 76.4. Some people use 78.6, but I use 76.4 and 88.2. And in my experience, that works a lot better because if you use 78.6, there are times when you're going to miss entries. Michael, the reason why we didn't take a look at gold, like I mentioned earlier, is because gold is still in a momentum. All right, it's still in a momentum, and I have not gotten any entry confirmations yet. If we had gotten here earlier, all right, and I probably saw this pattern, all right, you will see that this is the pattern that I showed you guys, where this is the accumulation, all right, we can see that this week is the manipulation, all right, the week down here is the manipulation, all right, and we've gotten the break of structure. And you see that when price came back for the retest, we got a bounce. All right, so this is how the pattern works. So you don't necessarily need to do too much, all right, to be able to trade with this pattern. All you need is to locate an accumulation, all right, like what we have here. All right, accumulation. Then we saw the manipulation, which was this low coming below the previous low, all right? And then this break of structure. And if you look closely, you see that this demand zone becomes our entry. And from there, we're able to get this huge move. All right, Ray is asking about hedging as a form of risk. All right, Elkanah, let me quickly answer your question before I go to Ray. All right. When it comes to Fibonacci, picture it as though you're trying to fire a catapult, all right, or you're trying to shoot an arrow, okay? Which simply means that the further you pull back the arrow, okay, the further it has the possibility of traveling, all right? So if you pull the arrow back well, all right, the more you pull it to the back, all right, the farther the arrow is likely to travel when you release the string. So the same way, 88.2 is the strongest, followed by 76.4, followed by 61.8. So for me, I use 88.2 as my strongest area of confirmation because it also affords me the opportunity to use a smaller risk, all right, or a smaller stop loss position. You get, as compared to if I were entering from 61.8 or 76.4. Are we together, please? Do we get that? Yeah, so this is the pattern once again for those who are just joining us. Do I remain focused on just one pair? All right, let me go to Ray's question. Hedging as a form of risk management. To be honest, if you're going to be able to hedge as a trader, all right, as a retail trader, hedging is going to be very tough for you. And the reason why hedging is going to be tough for you is because you are not a position trader. All right, institutions that practice hedging are institutions that use very large orders. And because of the large orders, using stop loss is very, very difficult. Because by the time the stop loss gets hit, they lose a huge chunk of their portfolio. Are you with me? They lose a very huge chunk of their portfolio. So instead of that, okay, what you can do is to learn how to have lower risk, all right? Enter trades using lower risk and get better returns. Do you get that now? So David is asking, where do I take profit? Usually the 23.6% of my Fibonacci is my first take profit. All right, so my TP1 is 23.6% of the Fibonacci. My TP2 is 0% of the Fibonacci. And my TP3 is a figure that I will not be disclosing on this call right now. Okay? You're welcome, Ray. Elkanah is asking, how do you set trading stop? Trading stop is best set on your PC, all right? And it's as simple as you just, you know, like I showed you during the live stream, you right click on the order and then you go to trading stop, all right? So once your trade is in profit, by the amount that you have indicated, okay, price is going to move. So this is what we targeted, or this is our analysis on AUD USD. All right, the price is coming this way and then we'll get our entry. Okay, on GBP USD, we also had analysis like that. Two zones. This was our first zone, our initial zone, and this is our second zone. So either of these two will validate our entry. Do we get it, please? Either of these two zones will form our entry for the buy, for the bullish momentum. David, I said my TP1 is 23.6. If I am using algo structure for my entry, my TP1 is 23.6, my TP2 is 0%, and my TP3 is a figure that I will not disclose on this call now. All right, so like I said, overall trend on gold is currently bullish, but I would advise that you take good precautions to find your own preferred entry. All right, and having said that, I want to say thank you guys for joining me. It's been one full hour of intense value. Our setup, remember the zones we're watching. On GBP USD, we have a zone we're watching, which you can also confirm with this, all right? You can see there's a trend line support serving as extra confluence for our trade. All right, there's a trend line here. Then if you come to the Euro USD as well, you see that there's a trend line as well. All right, but I doubt that this would have any serious relevance to what we're trying to look for. That's GU. We've done GU, we've done Euro USD. Let's go to AUD USD. 1 hour time frame, and you see that there's a trend line as well. All right, there's a trend line support as well. So we have multiple confluences around this area on AUD USD. We have multiple confluences around that area on GU. All right, the one that has not given us multiple confluences as far as the trend line support is concerned is Euro USD. So I'm expecting Euro USD to come this way. So thank you so much, guys. For those of you who missed the start of this session, you can easily watch the replay of the session. It's going to be available on the channel. All right, watch the replay, educate yourselves, enlighten yourselves. Because from next week, all right, every Monday, these things that I've just shown you, we're going to be using them to position ourselves in the market for the entire week. All right, so we're going to be having weekly market reviews starting on Monday, where these patterns that I've shown you will be our core focus. All right, they'll be our core focus, and we will be analyzing the markets based on this pattern that I have shown you. Okay, and using this pattern, we would position ourselves in the market and make some good profits every single week. All right, so join me next week, Monday. All right, by God's grace, I promise you're going to have a lot of fun. All right, and by the way, I hope you guys saw the way I handled XAUUSD Pro. All right, he said a lot of things and I didn't respond, but my response silenced him without causing any conflict. So thank you so much, guys, for your cooperation. It's been an absolute pleasure and absolute honor hosting you guys on this call. All right, thank you so much and God bless you. Have a fantastic rest of the trading day and cheers. Bye-bye.